Hi everyone, I'm Tim Hill, a registered mortgage broker right here in beautiful British Columbia. With over 15 years helping folks like you secure their dream homes, I've seen it all, from booming markets to those exciting times when rates start to drop. And right now, in 2025, we're in the midst of some anticipated rate cuts that could make homeownership more accessible than ever. But qualifying for a mortgage? It's not as straightforward as it seems, especially with BC's unique rules. In this video, I'll walk you through the key steps to qualify, bust some common myths, share tips on income, credit, and documentation, and even touch on how BC's speculation tax plays into it all. Stick around. By the end, you'll feel empowered to take that next step. Let's dive in. First things first, understanding the basics of mortgage qualification. In BC, lenders look at a few core factors to decide if you're a good fit for a loan. It's like a puzzle. Your income, debts, credit history, down payment, and the property itself all need to align. And with rate cuts happening this year, lower interest rates mean potentially lower monthly payments, which could help more people qualify. But remember, rates are just one piece. We're talking general examples here, like how a drop from, say, 5% to 4% could reduce your payments by hundreds a month on a typical loan. Always check with a broker like me for your specific scenario. Now let's talk income requirements. This is where a lot of people get hung up. To qualify, lenders need to see stable, verifiable income. For salaried employees, it's straightforward. Your T4 slips, or pay stubs showing consistent earnings over the last 2 years. But if you're self-employed, like many entrepreneurs in BC, it's a bit trickier. Lenders often average your income from the past 2 years' tax returns, and they might apply a reduction if your business is variable. A key metric here is your debt service ratios. There's the gross debt service ratio, which caps your housing costs, mortgage, property taxes, heating, and condo fees if applicable, at around 39% of your gross income. Then, the total debt service ratio includes all debts, like car loans or credit cards, and shouldn't exceed about 44%. With rate cuts, these ratios might ease up, because lower rates mean lower payments, potentially allowing higher loan amounts. Pro tip: if your income includes bonuses or overtime, get letters from your employer confirming they're ongoing. And for gig workers or contractors, keep meticulous records. Every invoice counts. Next up, credit tips. Your credit score is like your financial report card. And in BC, lenders typically want to see at least 680 for the best terms, though some programs go as low as 600. Building good credit starts with the basics. Pay bills on time. Every time. Late payments can tank your score fast. Keep your credit utilization low. Aim for under 30% of your limits. For example, if you have a $10,000 credit card limit, don't carry more than $3,000. If your score needs a boost, consider a secured credit card or becoming an authorized user on a family member's good standing account. Avoid applying for new credit right before a mortgage application. Too many inquiries can raise red flags. And here's a BC-specific tip. If you're buying in areas like Vancouver or Victoria, where prices are high, a strong credit score can help you access better rates or even alternative lenders if needed. Now, let's get practical with required documentation. Preparation is key. Gathering these early saves time and stress. You'll need proof of income, last 2 years T4s, notices of assessment, pay stubs, or for self-employed folks, T1 generals, and business financials. Identification is next. A government-issued ID, like a driver's license or passport. For your down payment, you'll need bank statements showing where the funds came from, whether that's savings, gifts, or investments. Gifts need a letter from the donor, by the way. Don't forget your credit report. Lenders pull this, but it's smart to review yours first via Equifax or TransUnion. Once you find a home, property details like the purchase agreement and appraisal will be needed. Employment verification is also important. A letter from your employer confirming your role, salary, and start date. If you're divorced or have child support, include those agreements too. And for immigrants or newcomers to BC, programs like the New to Canada Mortgage might require extra visa documents. Organize everything digitally. It really speeds up the process. All right, time for my favorite part. Qualification myth busting. There are so many misconceptions out there, especially with rate cuts stirring things up. Myth number 1. You need a 20% down payment to qualify. Busted. In BC, you can go as low as 5% for homes under $500,000, though you'll pay mortgage insurance. Rate cuts don't change this, but they might make larger loans more affordable. Myth number 2. Bad credit means no mortgage forever. Not true. While low scores hurt, you can rebuild. I've helped clients go from the 500s to approval in under a year with targeted fixes. Myth number 3. Self-employed? Forget about it. Wrong. Yes, it's stricter, but with solid tax returns and maybe a cosigner, it's doable. Rate cuts help by lowering the stress test rate. That's the qualifying rate lenders use to make sure you can handle higher payments if rates rise. Myth number 4. Rate cuts mean everyone qualifies easier. Partially busted. Cuts help with affordability, but income and debt ratios still rule. For example, if rates drop generally, your max loan might increase, but don't count on it without crunching numbers. Myth number 5. You can't qualify if you're a renter. Total myth. Renters often have great credit from consistent payments. Use that history to your advantage. Remember, myths like these keep people from applying. Don't let them stop you. Finally, let's address BC's speculation and vacancy tax, a big factor for qualification, especially if you're buying investment properties or in high-demand areas. This tax targets empty or underused homes to boost housing supply. If your property is in designated areas like Metro, Vancouver, or Capital Regional District, and it's not your principal residence or rented out long-term, you could face up to 2% of the assessed value annually. That's huge. How does it impact qualification? Lenders factor in potential taxes as part of your debt load. If you're buying a second home, show rental income projections to offset it. For foreign buyers, it's even steeper, at 2% for non-Canadians. Tip: if you're a first-time buyer making it your primary home, you're often exempt, but always verify. It can affect your total debt service ratio and overall approval. With rate cuts, more people might eye investments, so plan for this tax to avoid surprises. Whew, we've covered a lot, from income and credit to docs, myths, and that pesky speculation tax. Amid these 2025 rate cuts, opportunities are opening up, but smart preparation is key. If this resonates, reach out. As your BC mortgage broker, I'm here to tailor advice to your situation. Email me or call for a free consultation. Like, subscribe, and hit that bell for more tips. Thanks for watching. Here's to your BC homeownership journey.